Today is Monday, October the 28th, and the bulls were out because apparently, I don't think it had anything to do with a terrorist being killed, but China talks are supposedly going faster. My gosh, wasn't it 6 months ago when we heard they were 90% complete? I did nothing with that news. The high of the Globex high, the overnight high, was made just before the bell. So it was made at the just before the bell. So that became the Globex high. We hit the 50% fib mark, which turned out to be 1.618. That's the same value. Is it the same value? Let me see. Yes, they are exactly the same value. Look at that. As 1.618 of Friday's market run. So both of those fibs coincided there, enough to be a brick wall for the whole day. We came back to test the Globex high, went back to 38.2, came down to finish the day just bouncing a little bit off the Globex high. Advancers and decliners were in favor of the advancers by a little less than 2 to 1. Funny thing here on our stock market breadth is that I thought the advancers led the decliners on Friday, and they did, and that should have put us up to this overbought line, but it didn't. For some reason, it went down. But now it's going to come back up towards the overbought line. Very surprised. Still can't explain that one. Maybe I'll drop a tweet to McClellan and ask him. So what does that look like in our charts? Well, the S&P looks like this. We created a new gap today. Fell short of our high, but still managed to finish the day with a new record on the S&P. So my theory here that we were going to come down and the Chico span was going to use this wall as support, wall of candles as support, has not been borne out. So as long as the Chinese talks are going well, the market is going to continue to do well. What didn't do well tonight, I guess, was Google. I haven't looked at Google's chart after the market, but I did notice that their earnings were quite a bit off, like about, 15 to 20% off. So that's going, well, here's Google right here. What does it look like? That's the weekly. Let's go to the daily, and let's go into extended data. And it would look like we aren't really badly hit. So something must have read well in their conference call, because we finished where we ended on Friday. Now we're dropping a little bit more if we go into the 5-minute chart, but it's not really that bad. So that doesn't portend badly for the S&P and the NASDAQ tomorrow. We could continue to just create new levels of atmosphere. Apple, who have earnings on Wednesday, up 1%, much better than the 0.6% of the market, and they just continue to blow everything away. Analysts are saying that they expect the earnings to be good, but not spectacular. I think people will be happy with that, and we should see Apple, whose range I tweeted earlier in the day is expected to be about plus or minus $11. So we'll look more closely at that tomorrow before Apple reports on Wednesday. Caterpillar finished the day slightly down. I thought that this gap would act as resistance. It sort of did. We drove up and almost filled the gap, but didn't fill the gap, and then pulled down to finish just inside the gap. So yes, and the gap is accurately drawn. Again, good China news is going to be good for Caterpillar. I'd like to see a bit of a pullback, but doesn't look like that was going to happen today. Now GDX, which I'm holding on to as my hedge, I'm still calling for it to break through this thin, low resistance of the cloud. This big resistance acted as support, big area support, and then minor resistance, and then we've just toiled along down here, but I still think that any weakness of the dollar is going to have the gold bulls looking at the gold miners as an ETF stock to buy into. T, great earnings today. Look where it stopped, right up there in its gap that was formed a hole 2 years ago. Gosh, why can't I see it? Let's just zoom in this way. October of 2017, that gap was formed, and it's proving to be a solid wall today. Sellers were ahead of the gap back in September, but they placed themselves right on the gap, as I thought they would, as all gaps naturally form an area where sellers like to make a quick profit. Then they'll look for the bounce, and then they'll buy back in again. WDC up $1.57, strong stock. Wish I was holding it, but I'm not. Whirlpool down $5. Don't know where the bad news was there. I'm going to look for the bad news, but perhaps it's someone rethinking what happened after earnings, when the earnings weren't all that good and it plummeted down to the low 150s and then rocketed back up the following day. So what does it mean? Let's check the news and see. Wouldn't it be great if it could come down to the 38.2% or even the 50 at moving average and do a nice little bounce for us there. Amazon up $14, but still has a long way to go before it is able to plow through very thick resistance. I wouldn't be a buyer of Amazon here. It was stopped today at the 50 simple moving average, and we still have 1, 2, 3 more moving averages ahead of it. And there's Google, which is not looking actually that bad. Let's go back to the 5-minute. Not looking actually that bad. That's it for today. Bullishness seems to be the way to go.